commencing 17th. Alhamdulillah, it's Eid al-Fitr as well. Eid al-Adha, sorry. Okay, so economic calendar first. From what I looked, actually, it wasn't that much. Like there wasn't so many events that I needed, to be honest. Monday again. Party इतना ज़्यादा इसमें नहीं है, not that eventful. Just 1:30 Empire State because it's alone, and there's no other news event that might cause it to a little bit maybe spike it. But nothing, nothing crazy basically. If you have an eventful London where there is movement in a given direction, preferably to the counterparty direction, probability wise, counterparty direction if there's movement. If there is, especially if there's one-sidedness, that's even better. But if there's just general movement, I would be able to use that to my advantage, inshallah, with the skill I've learned, and simply just because of the experience I have and the trust I have on myself. I can basically just use that too. Even if I'm on side, I can just take that. So basically, look for someone to be trapped in London, whether it's longs or shorts. Granted that there's time still. Granted that there is a obvious draw on liquidity, equal lows, equal highs, premium or discount, fair value gap. That is basically what I aim for 2R, nice and easy, no messing around, and no more than 2 tries to get it. Because what happens is if it's more than that, then that uses up my daily entire arsenal of trades. And then also it's just basically it gets blurry basically after the after the second trade. Sometimes even the first may not be clear. And obviously if it's not clear, you just don't engage. It's not worth it. You can just wait for New York and you just get a real good move and just completely forget about the whole thing ever happened to you. So just general advice there. Now moving in. Yeah, Tuesday do have some news again, not big news, but 1:30 small news again, significant to cause intraday intra-session movement. Our time frame they merely even register. And then obviously you have some orange news. Sometimes again this could be violent. Sometimes okay. It's a bunch of speeches and they're all piled up, so I'm not sure if that will have much of an effect. But again, I'm not really concerned about that. I'm mostly just looking at a good London session where there's movement. If I get that, I'm out. I'm not trading New York. Or if I don't get that, or if I miss it, or uh, I'm on the wrong side and there's no movement, then yes, I'll reserve one trade to enter in New York. And granted, there is a setup that I will take advantage. Wednesday, nothing much. Thursday, yeah, some news here. Jobless claims. We might even have some decent movement because I think jobless claims does kind of move it a little bit. And there's the ECB council meeting, and then finally on Friday, you have HCOB that can again move it significantly. It's German as well. This is normally in London session just used to basically manipulate. On the intra-session wise, this is used to manipulate and offset and trap basically people on the wrong side of the market and just reverse real hard in the following move after that. S&P Global. Yeah, I think. Excuse me. I think this can definitely move it. This is the past data suggests this can. Existing home sales a little bit, but again, not much basically. Again, we can have some real good movement, especially given the fact that we had some big events behind us now. The NFP and the CPI interest rate, all of that is behind us. So there's a really high chance we've already done the monthly and weekly. Well, yeah, we've done the weekly, but the monthly manipulation's already done. There's a really high chance. And then finally, once this week most likely is the manipulation, and I'm looking for a bullish close on the monthly. And either this month, most likely this month, hopefully, we will look to go here. This is the area. This is my higher time from drawn liquidity, and I can finally say I'm more confident on it now. Last week and the week before I wasn't. I was just looking for surgical strikes, but now finally I am confident. So even if it's a scenario where we take 80% off and I'll leave the rest, I can now comfortably do that. I feel comfortable doing that because knowing that there's higher time frame, the structure behind us, context behind us. So this is the drawn liquidity for that, and this is obviously for this. Now Now for counterparty wise, keep an eye on the order block, 50% dealing range, dropping down to a lower time frame. These fair value gaps, these two, small order block here as well, just under the day. This is 4-hour one. But if I was to like grade this price swing, then this is above a premium, so I don't really take that much seriously. Any order block below the mean threshold of this dealing range, 50% of the dealing range, is something that I will consider significant. So with these two being in premium, they're not significant. They wouldn't count, so I'm just gonna get rid of that. So below 50%, what's the first one you see? This one, right? We just marked that on the chart. Yeah, it can come all the way down here. That would be a really extreme discount repricing, a really deep manipulation, which I personally don't think will happen because we've already done the damage here by trapping the shorts. Look how beautifully they're handshaking each other, the two price events. So this is your NFP news, right? The excitement. And this is your CPI excitement. Both are just handshaking, pure manipulation. They're used for pure manipulation. Okay, this is used for, well, this is, I guess, used for the manipulation bit, and this is this distribution. And then this was opposite. This was actually used for the manipulation, and then the distribution just happens after the manipulation's already taken place. So that's that. Now, my main focus is the 4-hour fair value gaps, these two. And if you can hold it, then we can, obviously, if we don't even price to the discount and find support here, then that means we're extremely bullish and we're gonna leave probably bags and just hit this straight away. Obviously, we still want some level of at least Monday not to take out this high. And only Tuesday, later on, New York session of Tuesday going up, because if it goes, straight away to the drawn liquidity of the week, then normally, we've noticed that if that happens, then it turns out to be a very messy price action week. So yeah, that's what I'm looking for now. Again, here, same thing. Above this, any order blocks to be considered, they gotta be above the mean threshold. So this 4-hour one is, this one is not. This is a huge 4-hour SIBI that can be considered. So that is something to definitely look out for. And what else have we missed? But yeah, I mean, it's literally just a really nice and easy one, a very straightforward one where the drawn liquidity, the counterparty, with a very good degree based on your experience, you also know very larger degree how it's likely to unfold. Where normally it's gonna want to price to a discount, accumulate first, price to a discount, cause the manipulation to get people to short. As soon as the shorts are trapped in dollar, boom, the expansion / the distribution then comes in, and then just takes it to the premium target that we've outlined. I would say keep this drawn. Just call it a 4H dealing range mean, just so we know when we are referring to our lower time frames. And then of course, if we do come here on an intraday basis, then we might even look at this as a potential support. It just helps us basically, because with our scalps, we're really in and out real quick. Sometimes these levels offer that support or that resistance for our Eurotoll trades to be facilitated, and then we can take measures accordingly. So I think that's all. And good trading, I would say don't push it. Purely just basically this is all so I can trust my experience. I can already trust it to a very large degree. The only risk is sometimes on a choppy session when it's not likely to move, if you take like 3 trades. So remember what we've discussed with that, okay? If let's say it's choppy and you end up taking 3 trades, okay? Not to panic. Don't think, oh, I should have known better. Yeah, there's some things you can figure out, but again, you're still learning, okay? Don't kill yourself over it, okay? You've done exceptionally well, especially in the last month. Exceptionally well, beaten all records, all personal bests. So, if it's a choppy session, take 3 trades. You've used up your trades. Guess what? You know, that's the reason you have 3 trades maximum, right? You stop. Guess what you're doing? You're limiting the damage and also the mental damage, and then you just come back next session. 1 trade, 2 hour, boom, it's done. It's fucking done. I don't need to worry about that. That's the whole reason I have limits on in an unlimited environment, which is trading. You gotta have limits on. So what I learned from last week is, if let's say you've been taken out, but not quite feeling like it's gonna reverse, and you still think your original bias is correct, which, by the way, statistically speaking, does happen to be correct in the majority of the time. Statistics shows, looking at my past data. Normally I'm right about a direction. Normally it's not a good idea to reverse. Yeah, some occasions I'm right to reverse, and it's really clear when that happens as well. Yes, there's going to be outliers as always, but by far and large, exception does not define the rule, as we discussed before. So by far and large, no, I am actually correct. So that's good. So what we do with that is, to allow some time to pass before you take your second entry. So if you're long, you take it out. If you don't think it's going to go short, lower, so you don't take short. You shouldn't take it short. You're not feeling comfortable with that. You still want to take it long, but you just got taken out. You don't want to just enter again. So what I do is wait some time, okay, let the structure develop a little bit more, take another high out. Yeah, you get a reverse entry, but guess what? You adapt your stop loss to that, as well as your TP. Yes, your reward falls, but guess what? As long as it doesn't fall too low, what's too low? 1.5. If it's above that, you take that, okay? You fucking take that. Yeah, if it's too far out, then obviously leave it. But yeah, if it's that, just give it some time. Like, literally, that's the simplest thing I can tell you. You have a model, you know what you're doing, you know your higher time frame levels, you know your bias, intraday bias, your weekly bias, your session bias, you know all of that. And most importantly, you know not to mess with the trades. It's a fire and forget. Once you enter a trade for a good 2 hours, majority of the time you're not touching that shit. It's gonna hit a take profit or it's gonna hit a stop loss. And off. You do not fuck with it, you do not mess with it. Because by far and large, my trades win, okay? I'm not talking about the data collected in the last 8 months. Okay, I've changed things. That new model was brought in, slightly smaller stop, but then we addressed that by having a small TP as well, but 2R, and it's just easily hit most of the time. So trust the process, Mansoor, and just do what you do every week, okay? That's my best advice. Thank you.